Hello, hello, hello. Welcome to Al Stock Trades. I hope you're having a wonderful day. And so today a lot of things happened. Well, we had the CPI data come in, and we also had the FOMC. We have a change in rate, which is a step in the right direction. We will go over a good video regarding what happened with the FOMC today. But if I may, just really comment on it. If we can do a negative x squared uh, upside down parabola, the way we can graph this, if we can graph this. Is there a way? No. Upside down parabola. So reason why I'm trying to do this is I'm trying to explain this without having to use paper pen. So assuming these are the rate hikes and that we're slowly increasing these rate hikes, what we're doing is if you take the slope of this here versus the slope of this direction here, which is going to be bigger, the slope here or the slope here? Obviously the slope here. The inclination in the derivative here is higher, but the slope here is a lot lower. So we've been increasing, let's say 75 basis points, and right now we went ahead and we decreased the increase, which means that the rate of the rise over run has decreased, meaning that we're getting to a point where we're nearing a peak of the federal funds rate. Okay. Now we can go ahead and talk about every time the federal funds rate has started to go down, right? And we can do that. We have that data. But overall, we are slowly nearing the peak of the federal funds rate. Okay, so now let's go ahead and let's talk about Bright Health Group. I got a lot of comments on that, and I think honestly, it's a good question. So one of them YouTube subscribers said, "Hey Al, what's the what's the difference between like Clover Health and Bright Health Group?" Well, we're gonna go ahead and point one out. So this is the financials for BHG. I want us to focus on book value because normally when we hit a recession, a lot of stock, a lot of stocks end up falling down to their book value or near their book value. Okay. So what you can see here is the book value, and this is an updated one for TTM. The book value for BHG is 59 cents. Now, normally stocks don't necessarily trade near their book value only if it's in distress or there's some type of macroeconomic event, a recession, something to where stocks go down to their book value. Okay. So if we were to go to Bright Health Group and type in BHG stock, you can see that it's literally coming around near its book value. In fact, it fell down here at 53 cents, and then it soared all the way here, 30% gain to 68 cents, and then it fell back down near the book value, which you can see here, near 59 cents. So literally soared down, went up to its book, the book value is right around here, and fell back down. And it's closed at after hours, 56 cents near its book value. So you might be asking yourself, whoa, I mean, why is this going down? We talked about book value calculation. You can watch that video. But what I want to also focus on here is the working capital. So unfortunately, Bright Health Group has more short-term debt to pay than their short-term assets. Okay. Now, when you have this, there's only two directions. You can figure this out through the working capital. They either can raise more debt, essentially, raise more debt, issue bonds in a way, raise more debt, and unfortunately, get more debt, which they can't really afford to have, or dilute shareholders, or risk bankruptcy. Okay, and as you can see, the working capital is negative now. The working capital is negative. They also have a lot of shares in comparison, more shares to Clover. They have a lot of revenue, but it doesn't mean much if you're not collecting it towards the bottom line, which they're not. So there's a lot of adjustments right now that's happening. Could they survive? Yeah, maybe they can, right? But a lot of folks are telling me do a video, and if you're curious why it's all of a sudden just dropped down to its book value, well, because a lot of things have happened with the stock that you can go ahead and read about, right? But overall, as I stated, a lot of stocks and companies are going to start coming to their book value, especially if they're unprofitable. Okay. Now, on the flip side, let's go ahead and go over Clover. Okay. So here's Clove. And the difference here, though, is BHG, the gross margins, there's some positivity with that. With Clover, they need to work on their gross margins. The difference here, though, is if you look at working capital is actually positive for Clover. Okay. So it's going in the right direction. Okay. They have enough to satisfy their short-term debt obligations, meaning that as of right now, they are not at risk of bankruptcy. So what does this mean? And what has changed since last year? So let's go ahead and open up the Clover Health. CLOV stock here. And let's go ahead and just kind of go to the max, right? It's like 1 year, but I want to get most of it. So we'll do here. So what's changed since, honestly, when the stock went up here? Like what's honestly changed besides the stock price? Okay. Well, they have more revenue. They have more, they're burning less cash now. Their cash burn has gone down because of the coronavirus. It was an honestly terrible time for them to go public / good time because the markets were easy in terms of easy money supply. And another thing, excuse me, is that they now they have more members, right? And they have a real long-term Wall Street, medallioned CFO. And now they're prioritizing profitability. So the only thing that's honestly changed is the recessionary environment, the macroeconomic environment where money, easy supply has unfortunately, had its a problem right now, right? So that's honestly the only issue now is the market's changed. The market wants free cash flow. Okay. We go through cycles, growth versus value stocks, right? So growth versus value. Okay. And right now, value is winning. All right. We could go ahead and look this up in in the mastering here. Let's see if we can find the growth versus value. So if we were to do this, you can see when the number is over 1, pardon me, interactive tool greater than 1 favors growth, while below 1 favors value. So what we're starting to see now is we were highly above 1 where growth was favored. Now, I usually like to put value going 1 in this, but you just got to change the division. But it's nice, makes sense. Most people think in growth minded. So it's above 1, it's growth orientated. When it's below 1, which we're slowly hitting down to, what is the mean? We can calculate a mean reversion here, right? But it seems to be pretty even, Steven. You can also take a look at it here in terms of growth versus value. And this is an old one. This is since April, but you could see that once we broke, and yes, you can use technical analysis to help you with growth versus value. And as soon as we essentially broke this line here, it was a message saying, hey, value is going to start really pumping. Okay. Value is going to start going. Okay. So there's obviously other metrics you can use, but that's on average. For all our members, you can click on here. You'll be able to learn more about that. So now, what's going on with Clover? Okay. So if you go ahead and if you type in a Monte Carlo sequence projection, you can see that the bull case is around $1.10, right? The base case is near the green, the bull, but you can see though the bear case is going down. In fact, look where it's headed. It's headed near the book value. And what is book value? Well, it's right here, guys. It's 82 cents. Okay. So I'm not saying that it could head there. I'm just saying that potentially, since a lot of stocks are going near that direction, that's pretty much what Wall Street is sending a message. It's essentially sending a message, right? So what does Clover need to do to stop this from happening? This is a direct message. If you do not have a profitable business, it's honestly great that it happened this early. It forces them to kind of turn off the growth machine and focus on proving themselves with the business model. But it's also a blessing in disguise because once they do prove it, the stock is going to go back to the mean reversion of where it started when it first started trading. And, most folks with this beautiful quote that we went ahead and mentioned, let's go ahead and open it up here. Unfortunately, as the brave one comes, other brave ones follow. Then we have a large crowd that essentially watch the success of the earlier investors, and they consider now it'll be a safe investment once they become profitable. And unfortunately, by then it's already too late. Stocks are going to go up extremely hardcore. Again, it's like a rubber band effect. We're at levels that we haven't not seen before. And if you go to our equity hedging index, and if you see this over the past 15 years plus 16, 17 years, you can see that we barely hit this green line. And every time we do, it's such a great time to buy. Literally, the COVID pandemic, great time to buy. Once this thing hit the red line, great time to sell. Well, now we hit this beautiful tipping point, and we are starting to see it go down. The question is, could it do kind of a double on, kind of double dip here, like it goes down and it comes back up, right? And that might be the case. As you can see, there's another line there ascending back up. But the question of the matter is, every stock has one of these. Fortunately, it's very hard to get that data. But this is from the S&P 500, the SPX. And what you can see here is there's 1, 2, 3, 4, 5, 6, 7 opportunities in our lifetime. And again, I've been reading a lot of comments lately, and unfortunately, it's very upsetting, to see retail investors struggle. One comment we were talking about in Al Stock Alerts stating that, only the rich are designed to be able to weather the storm. And unfortunately, there is some truth to that. I have to agree. There is some truth to that because, let's assume right now a recession hits, which it will, right? And let's say unemployment rates level rise and you get laid off. I mean, what are you going to, excuse me, what are you going to do? What are you going to do? You're going to ultimately end up having to, live off of your savings, your X, Y, and Z, then your investments and possibly your 401k. Who knows? But unfortunately, Americans, don't save a strong emergency fund. Okay. Let alone an emergency fund for a recession. So it's unfortunate. There is some truth to that. Okay. So it's, I understand. It sucks, man. I get it. Right. So that's why I always advocate, always invest. What you're essentially afraid to say, okay, that's fine, right? Have some investments that are have a successful business model and have some investments where we're like, you know what? I don't have a problem losing this, right? Now, do I think Clover is a lost investment? Absolutely not. I do believe that they have a lot of tailwinds going with them. But one thing that we do have to understand is that the simulated price projections here indicate that we may be going down to the book value. Okay. Now, why do I say this? I say this because if we do head down to the book value, perhaps, if we stay there for too long and the NASDAQ doesn't have a great, doesn't extend its grace period, then Clover will have no other choice but to do a reverse stock split. Now, what that will entail, if that will happen, it's up in the air. It's all speculation. I kind of gave my thoughts on it yesterday and kind of work things out with that. But regardless of whether a stock splits or not, because I got another comment saying, oh, this stock did it. And I looked at the financials of the stock and the financials were terrible. If Clover ends up doing that, regardless, if there's a business model and this company's making money, and if it can turn a dollar into $5-10, then of course this is a business. It's essentially printing cash, and that has value, and that has an intrinsic value calculation, and the price will go up to that. Unfortunately, you have to understand that when you enter a market that is so pessimistic, I mean, we're talking a market that is extremely, when you have a market here, we're talking a very fearful market. You talk to retail investors during these time points, they would tell you to go F yourself. And that's just the unfortunate cause of retail investors. I mean, what are you going to do, right? This is just who they are. And we want to reach people that hopefully listen and, question everything we say and educate them, yourself about this. But I feel like, other successful folks in the market, I feel like they kind of cocoon themselves because they're like, I don't want to deal with these crazy people. Because honestly, it is very taxing, right? It is very taxing. But again, the mission is very clear. We want to help retail investors thrive. If you don't think that this is a wonderful opportunity to be in the market, then I don't understand I really can't help you, right? I really can't help you. If you look at, if this doesn't make sense to you, I honestly don't know what will. I'm just like, maybe I'm just hardwired programmed to kind of believe that red is good and green is bad. That's kind of pretty much how I hardwired myself. But overall, this is a time, it's an opportunity of a lifetime. We literally had it 2 years ago, and people said, I'm going to wait. It's going to fall. 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 And then, then most people are like, screw it. It's not going to fall. And they probably got in right here, right? Hopefully you can see the mouse, and then it falls. And then they're like, screw it. It's a shitty market, right? And then they hold. And then once we get to the near bottom, then they sell. So that's kind of the idea right now, just to walk things through. It's definitely stressful, but I'm not fazed, because at the end of the day, nothing's changed in the business. And if you think things have changed, then, only thing that's changed are macroeconomic events. That I can agree with. But if you think things have changed, well, then honestly, maybe the market isn't for you. And most likely you've probably entered the market within 3 years. And you should consider the fact that maybe index funds, or maybe just in general, maybe just not the market would be something of wise to you to make your life more fulfilling. Because for me, I love, I love this. I love when I see red. I really enjoy it because it's an opportunity. Mr. Market is mispricing a lot of stocks right now. Some are still overvalued. Don't get me wrong. But the ones that I'm looking at are completely undervalued. In fact, here's this other one. We'll make a video on it. I think this is undervalued. I mean, if you look at SBNY and look at Signature Bank, this is kind of a mean regression for a stock. We'll show you kind of later on how that works. But you can see that we're hitting an edge here, indicating that there's a high probability that we may bounce. And this is not a technical analysis. This is fundamental analysis inside the technicals, if that makes sense, right? And I did it. I went ahead and did an intrinsic value calculation, a brain machine calculation, and everything's telling me it's undervalued. Also, I also highlighted some folks that added. Bailey Gifford added 364%. Also, Ray Dalio, a really well-known investor, added 198%. Also, Jim Simmons from Renaissance Technology added 900%. And we got a new buy, obviously, from here, Bailey Gifford. So there's a lot of opportunities in the market. But overall, guys, that's kind of basically what I have for you here. That's what I have. In terms of just the last minute request here. So for all the stock requests, we're going to go ahead and in a couple weeks from now, within 2 weeks, we're going to go ahead and go over these as much as we can for the month. And you can meet us here on the video meeting, okay, guys, for the mastering and stock alerts. And we'll go over these stocks that you guys have, and we'll break them down and everything, okay? All right. I'm not even showing it to you guys right here. We're going to go ahead and break these down, okay? And we'll be meeting here. All right. If you guys have a question, let me know. I just came back from the hospital, so I'm just really so exhausted. All right. So if it goes to the book value, that's a great deal. Red tax sale. I mean, yeah. I mean, people don't understand when the stock goes to the book value. It is how do I say this? It is the bankruptcy price that if the company became bankrupt today, this is how much shareholders would get, right? Plus or minus, let's say 10%. Who knows, right? Right? This is how much shareholders would get. That's essentially what book value means. And if a stock is trading at book value, you're getting bankruptcy level pricing. And I just mind boggles me that retail investors are like, never, 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 terrible stock. But they go ahead and buy it at $28. They don't understand the evaluation. I mean, I don't know how many times I have to stress this. But I'm honestly just starting to believe that wealthy and being wealthy is a mentality. It starts mentally, which is something that's kind of sad, but it is what it is, right? All right, guys. Hope this was helpful, and I will see you on the next one.